Welcome to Magicbricks Now. Thank you for tuning in. This is the urban debate. Where can you double your returns on your investments? Magicbricks Now picks top investment destinations in Bangalore this evening. But before we start that debate, let's take a look at what's making headlines today. Mega deal in the works. Singapore's GIC, Macquarie, JP Morgan and Standard Chartered are in the running for a deal with Tata Housing to build luxury homes. The deal could be closed by June this year. That's a Magicbricks Now exclusive. Home loan demand is powering businesses at top banks and home finance companies. That's the news coming in from the earnings declared by Indiabulls Housing Finance, DHFL and private sector biggie Axis Bank. Well, we get to those stories in a bit, but we're looking at where you could possibly double your money in the real estate market. Remember, given the state of the market right now, it's unlikely we'll see the kind of returns we saw over the last 10 years come in from real estate, in which case you as a buyer have to cherry pick the right locations and the right developers. This week on Magicbricks Now, we're picking out hottest investment destinations where you could possibly expect huge returns. We're picking out these destinations based on job creation and infrastructure that's expected to come in terms of roads and metro stations and, of course, flyovers. Remember, yesterday we talked about Mumbai and the destination that was picked unanimously was Chembur. Today we look at Namma Bengaluru. Magicbricks Now looks at Hennur Road and Thanisandra. What makes these locations tick? Are there any other locations that could benefit from them? And where should you be investing your money? Those are the questions we're asking this evening. We're also throwing open our phone lines. As always, there's a phone line at the bottom of your screen right now. Pick up the phone and call us if you have a question about investing or buying a home in the city of Bangalore or anywhere else in the country. On the show with me this evening, Jayashree Kurup, Head of Content and Research at magicbricks.com, also our knowledge partner, and Sivaramakrishnan, the Head of Residential Services in South India at CBRE. I thank both of you for coming in. Shiva, I'm going to come to you first. When we talk about the city of Bangalore, obviously there's a lot of talk about Whitefield and Sarjapur Road and all of those other neighborhoods that we know about. I'm interested in the ones that are underpriced, that will see the sharp uptick over the next couple of years. Is Hennur and Thanisandra on your list of neighborhoods that will do really well?
If you look at from a Bangalore market, Bangalore is one of the most stable market for last 5 to 6 years. And Thanisandra and Hennur Road are two micro markets which stands out. And we are looking at it about 15 to 30% appreciation on a year-on-year basis in these two micro markets. See, Hennur Road was relatively unknown till year 2005. But with the construction of the new airport there, Hennur Road has become one of the prominent location, not only because of the price appreciation, but also the social infrastructure and all other activities which have seen in these two micro markets. So I believe Hennur Road and Thanisandra are the two markets to watch out in next 3 to 4 years, and we really feel that the growth that is going to see in terms of the price appreciation, in terms of the social infrastructure, these are the two micro markets that we should really watch out.
You know, hang on, Shiva, I want to go over the numbers. According to our data from magicbricks.com, Thanisandra is being priced at about 5,500 rupees a square foot on an average. It's moved up 40% in the last 2 years. What sort of appreciation are you expecting from it going forward? Can it repeat that performance over the 2 years to come?
See, if you look at let's take Hennur Road first. And now there are. Can you hear me?
Yes, Shiva, go ahead.
Yeah, look at Hennur Road for example. Year 2013, the price was hovering around say 3,500 to say 4,000 rupees per square feet. Now it has gone ahead, and the price points today is around 5,000 to 5,500. And as you asked a question, what you will feel where the market will be in 2020, we predict the market to be around 6,500 to 7,000 rupees by 2020. We feel an appreciation, minimum appreciation of about 15 to 20% is bound to happen in these two micro markets. And these are two good micro markets to bet on.
All right, I'll bring in Jayashree. Jayashree, if you're looking at these numbers right now, do you also expect a 15 to 20% uptick in Hennur Road and Thanisandra?
Absolutely, Faye. And the fundamentals are very strong in these markets. Look at Manyata Tech Park was one of the biggest drivers there, and you've already seen that the IT infrastructure in Bharatiya City, for instance, has already seen take-up of commercial space. So you know the drivers are good, and the quality of stock that has come in both Hennur Road as well as Thanisandra are both good quality stock, well-known developers. Good solid developers. So there is, I don't see a downside here, and it's very close to the airport. The access to the airport is a big driver.
You know, Jayashree, I want to ask you this. If we drive down Hennur Road, there's so much construction happening on that road. Some of those projects have, you know, upwards of 2,000 apartments under construction, which means that there'll constantly be supply available in this market of new buildings. At some point, so I'm just asking this question, if I get in as an investor at this point today and I'm looking to sell somewhere down the future, I'll always be competing with a builder who's releasing new supply. So what kind of exit point will I also get? Because if I'm going to get in as an investor now, I should also be worried about, you know, managing to offload the apartment sometime in the future at a profit.
It's like this way. There has to be a good commercial driver in the market for that demand to continue on a growth trajectory, and for at least the next 5 to 7 years, considering the amount of commercial development that is going to happen there is steady growth in the residential prospects. It's not going to be a meteoric rise to the top, but today at 5,500, rising to about 7,000, 7,500 is not such a difficult task once the market starts picking up and the buyers, there is more positive sentiment in the market.
Shiva, same question to you. Are you worried at any point about oversupply in either of these markets?
See, if you look at from Bangalore as a market as a whole, and this is very curious. You take in a South Indian market, you've got Chennai, you've got Hyderabad, but Bangalore has been stable over the last 10, 12 years. What is the reason? The reason being the demand drivers in Bangalore has always been cosmopolitan. They are not better with any location. So the interesting aspect of Bangalore is that the locations compete with each other, the products compete with each other, the projects compete with each other. So very interesting the aspect that you don't have to be a resident of Hennur Road to buy a property in East Bangalore. You don't have to be a resident of Whitefield to look at, or if you're working in Whitefield, you're not better with the Whitefield. You might even look at Hennur Road. So what we're trying to say is that, see, the corporates are evenly spread across in Bangalore. You'll see IBM in Manyata. You'll also see IBM in Bannerghatta Road. So and coupled with the fact that the Bangalore as a market is not driven by people from Karnataka. It's basically driven by people from outside. So what happens is that no territory is kind of isolated or insulated for the purchase. So that brings in a lot of stability for the market. So we believe at the end of the day, Bangalore continues to bring in momentum, continues to bring in stability, and demand drivers is not only confined to one location, it is all across.
Okay.
So,
so tell me
a person working in Whitefield can even look at it, Hennur can look at it, Thanisandra.
So tell me this, Panathur and Varthur, if we look at it, this is the second option, of course, of possible neighborhoods that will do really well. If I were to ask you to compare Hennur to Panathur or Varthur, which one do you think will do better in the next, say, 4-5 years to come?
See, if you really ask me, three markets which we feel will do extremely well is Varthur, Hennur and Thanisandra. So these are equally good markets. And as I said, demand is not confined to one location. So with this in mind, I believe these three micro markets will give anywhere between 15-20%, as Jayashree rightly said. Achieving about 7,500 to 7,250 is not a difficult task. So these are three micro markets to be precise, which we can look at closely. And also another important interesting point about all these three markets are the extension of the nearest market. Like for example, if you take Hebbal is already at about 8,000, 9,000 rupees per square feet. And whereas if you come to a market like Hennur and Thanisandra, you'll get about 5,000 to 5,500 good quality grade A developer projects. So which makes the for the customer also that you will get an affordable, good premium apartments, which is not very far off from these good micro markets. So we believe that there is still room for appreciation. The growth will definitely happen, and it is not going to be a manufactured one. It's going to be a gradual one, dictated by the micro market, dictated by the market, and not manufactured to keep the customers, to keep the investors within the project. So it's not going to be a manufactured price appreciation that is going to see in next 3 to 4 years. It's going to be a gradual, driven by the market for next 4 to 5 years.
All right, we also know that Bangalore is a big rental market, but what I want to understand from both of our guests is if I were to get in at this point and invest in either Hennur or Thanisandra, should I be looking at the 2 bedrooms basic that come up maybe in the 40 to 50 lakh rupee bracket? Some of them are in the 60 lakh rupee bracket. Is that the market I should be looking at? Because then I'd also be able to sell easily, I'd be able to rent it out easily. What advice would you give an investor looking at these 2 markets at this point, Jayashree?
Go for the steady markets, go for the ones where there is always steady demand, which would be the 2 bedroom, 3 bedroom, not very overpriced, and especially in the Bangalore market. Very interesting finding in the prop index that we are going to release shortly. In the Bangalore market, about 85% of the market is in that roughly about 5,500, 2 bedroom, that kind of market, and that is where that is why this is a steady market. It hasn't overpriced itself, and if you've seen a slowdown, you've seen a slowdown in the premium segment where there is more supply than there is demand. But in this middle segment, there is endless demand, and that's because the growth is there. There is, like Shiva said, people from outside Bangalore coming into the city, they don't have any affiliation to any particular part of the city, and if it gives good social infrastructure and good quality homes, there is rental demand and there is demand for purchase. So if you want to exit at some point of time, you're not going to find it very difficult. But if you buy a premium apartment, it's going to be that much more difficult to exit.
But, I want to ask Shiva this question. This is a question we get often from people who live in Bangalore, who work in the IT sector. So one of the things is obviously the 2 bedrooms and the 3 bedrooms. There's also right now a lot of supply coming up in Yelahanka, Jakkur, going even further down for gated communities, plots of land, villas that are being developed. Would you say that 2-3 in Hennur is better than maybe a villa or a piece of land in one of those gated communities in Jakkur or Yelahanka?
See, if you look at from a perspective of plotted development, and who buys a plot? At the end of the day, it's the investor who buys a plot. There is no end user that is going to come and buy a plot. So what happens is that, and what we have seen in a plotted development project is that the investor changes hand from one investor to another investor. So it is actually, it has a lot of dependency on how the market moves. So Bangalore being a stable market, I still prefer an apartment, I still prefer a villa vis-a-vis a plotted, but at a good price if plots are coming in, you can look at it in terms of buying it. So and one more point to the earlier question is that if you look at it, the Bangalore is a market, since you asked a question on 2 BHK and 3 BHK, the Bangalore as a market also resized themselves from a period of 2009. So if you look at from a pre-2009, 2010, the size of 2 BHK would have been around 1,400 to 1,500 and a 3 BHK around 1,800 to 2,000, which adapted themselves from 2009. If you see, you can get 2 BHK between 900 to 1,200, 1,300 and a 3 BHK from 1,300 to 1,500. This also adds value because you'll get affordability in terms of the capital values are concerned, and predominantly the market is driven by IT, and the quantum of the employees in the price in the salary bracket of about 60,000 to about a lakh is much more than anything above a lakh. So this also goes well with the price bracket and the sizing currently in the Bangalore. But with respect to plot versus villa, I still go with a product which is either an apartment or villa in terms of an exit route is concerned.
Well, Jayashree, I also want to ask you about the choice of builders at this point. Now, it's true that this neighborhood has some of the biggest names across the country building there. There's, Puravankara, there's Kolte Patil, there are a lot of very large names, but Bangalore also has its set of builders who are local. DS Max, for example, which only builds in Bangalore. For someone who's looking to buy, there's a massive pricing difference between the first set and the second set, also in the plots of land that are being considered. So there'll be larger amenities available in larger, complexes. If I'm buying as an investor at this point, should I be paying the extra amount to be part of a township that has 2,000 apartments? Or should I be happy with maybe, a 40, 50 apartment complex?
Today, I think investors want to invest less, and if it is a local developer but has a track record of delivery, and Bangalore, there are a lot of local developers who have a track record of delivery, there is no harm in picking that up because your entry price is less, so exit is easier. But having said that, these large format townships, it's not that they haven't delivered a good return. You just have to hold it till its own dynamics work. For instance, if it has integrated development, there is commercial, there is retail, and there is residential. When it comes to that break-even point, when everything plays itself out, and you get better returns. So if you are an investor, you have to spend a little more to get into a Kolte Patil or a Puravankara. But remember that there are some developers who outperform the rest of the market. If you go for the best, they normally actually give you better returns than the local markets.
Well, so a very quick question to Shiva. Shiva, we know that there are some huge issues right now in terms of infrastructure in Bangalore, very basic stuff, water supply, roads, things like that. Should I keep that in mind also? For example, if I'm going into a large complex with over 1,000 apartments, I have to make sure that there's water supply that's going to be made available, which we know is a challenge right now in Hennur, Thanisandra, in any of the markets in North Bangalore. So how important is it as an investor and a buyer to keep basic amenities in mind?
See, the basic amenities are fundamental of any project success. But the best part about Bangalore is that these large integrated township projects are developed by good grade A developers. And what we've seen in Bangalore, or any city for that matter, developed by a grade A developer, he ensures that these basic amenities, basic fundamentals are ensured for those customers. So I still bet on township projects. I still bet on large formats, because the kind of the amenities you get, the kind of the leisure you get inside the project is much better than a standalone 10 units, 30 units, 40 units projects. And today's customer is so demanding, and I still put my bet on large formats. And what we have seen in Bangalore is that these fundamental things, and which is basic things like the electricity, power, water, are all ensured by the developer. So I don't see any challenge in that aspect as far as the large formats are concerned.
All right, so this is what we've learned. If you're looking for an investment in Bangalore, Hennur and Thanisandra are hot picks that you should consider. Stay within the 2-3 bedroom apartment bracket, 5,500 rupees a square foot. That's where you should be, that's a sweet spot for both rentals and for exits in the future. And of course, stay with the large developers, the large, lots of amenities. That's what people are going to be looking for, especially when you want to exit. I'm told that Ravi from Hyderabad has called us. Ravi, go ahead. What's your question? All right, we seem to have lost Ravi. If Ravi wants to call us back, you may do so. I also want to very quickly ask Shiva about connectivity. We saw Whitefield had some protests. We also saw the outer ring road area on which Hennur sits also had some protests. Do you expect, Hennur's infrastructure to keep up with demand going forward, or is there going to be a Whitefield-like situation in both Hennur and Thanisandra in the future?
See, one of the key challenges that we have seen in Hennur Road is the large trucks parked in the night, the bus depots, and the traffic snarl that we have seen in Bangalore. So Bangalore has an inherent problem of infrastructure with respect to traffic jams and the kind of roads that they create at this juncture. So it's not only a problem which is confined to a specific micro market. If the government doesn't step in and improve those facilities, it's going to be a challenge across Bangalore. So it's not a reason or a problem which is only confined about Hennur, but definitely we feel that if the government doesn't step in and doesn't improve the infrastructure, the appreciation that we are going to talk about, which is about 20%, 25% on a year-on-year basis, or anywhere between 15-20%, may not happen by 2020 or 2022. But looking at the current trend, we feel that this is possible. But this is a challenge that we need to watch out.
Well, Jayashree, what kind of supply dynamics are you seeing in these neighborhoods right now? I know you're working on the index at this point. So we've seen movement of prices being flat across most of the country in terms of sentiment. It's flat across the country as well. What is sentiment like in Bangalore and specifically in North Bangalore at this point?
Bangalore sentiment held for a very, very long time. Much after the rest of the country, the sentiments had dropped. We've seen Bangalore sentiment drop over the last 3 quarters, consistently drop. And this is the first time when we've seen a correlation between the price and the sentiment. We find that areas where there is heavy searches, good demand, I would use that as a proxy of that consumers are interested in those areas. When the developers have raised prices and not held on to those prices, believing that the Bangalore buyer is going to steadily keep buying, that is where you've seen the sentiment drop. The consumers not taking well to raising the prices of homes that they're interested in. If the developer continues to hold the prices and brings the projects to completion, I think that's where the consumer sentiment in Bangalore can work well. I think what's happened is that Bangalore, as in the rest of the world, there is a dip in sentiment. There's not much happening in the economic perspective, from the economic perspective, but that has impacted the prices and that has impacted sentiment. But the consumer still has a propensity to buy. There is new jobs. There is a good amount of disposable income. So it's not a crisis of finance, it's a crisis of sentiment. And I think if the developers go that little extra mile, the Bangalore buyer will continue buying.
All right. We have on the phone line with us Deepak Khurana, who's called us from Bangalore. Deepak, if you can hear us, go ahead. Tell us what your question is.
Ma'am, actually, I want to know the prospects of Bhartiya City.
Okay.
If I am taking a 2 BHK in Bhartiya City, after 3-4 years, what is the prospects? 4 to 5 years.
Okay, after 4 to 5 years, what are the prospects? And will you be buying this, Deepak, purely as an investment?
Yes.
Okay. Shiva, do you want to take that question? You talked about Bhartiya City. The fact that, if he comes in right now as the Deepak buys an investment of a 2-bedroom apartment, what sort of returns can he expect in the next, say, 4 or 5 years?
If I understand correctly, Bhartiya City is hovering around 5,200 to 5,300 rupees per square feet at this juncture. And see, all the parameters we spoke about, it's in the Thanisandra area. It's a large format project, and it's from a reputed good developer at this juncture. And we believe that the price appreciation will be in the tune of about 15 to 20% on a year-on-year basis. So we expect anywhere between 6,500 to 7,000 rupees by 2020. So it's a good pick. Primarily the fact that it's in the micro market that we're talking about, and provided the developer delivers on the time that he has projected and committed, I think this kind of price points appreciation is possible.
Well, we do know there have been a few issues with delays in this project so far. Do you expect that to in any way to hurt its prospects?
Of course, see, delivery is one of the important aspects as far as the decision making is concerned. If you look at phase that today the customer is no longer taking a decision on the first site visit. See, what we are seeing now, that new trend is that the customers visit at least 3 to 4 times before they take a decision as far as the buying is concerned. And he doesn't give in to the marketing team so easily. So he evaluates the track record of the customer, the past track record. He looks at the pace of the progress of the construction as projected by the marketing team based on the site. So he looks at all these aspects, makes 3-4 times, and then take a decision as far as the buying is concerned. So if there are delays in a project, if there are issues in terms of the pace of the progress is concerned, definitely the price appreciation that we're talking about will be dented. So delivery is one of the key factors as far as the returns are concerned over a 3 to 4 years time frame. So if you ask me different parameters on which you should put your bet on the appreciation, the first important aspect, if you ask me, is delivery and the pace of progress as projected, as committed by the developer.
Well, Jayashree, does it cause you any concern that we have already seen a few delays, in a couple of phases of this project? And would you recommend to Deepak that he goes ahead and buys?
See, there are some very big positives in this project. The project has been extremely well conceived. It's come from a group that who were not big developers earlier, but they are very design-led people, and this whole project has been design-led. So if you look into the nitty-gritty of the project, it's extremely, once the handover happens, there is a lot of livability that comes with, the promise of livability comes here. So once it becomes occupied, I think there are many positives. The other good thing that I would say is that they have a integrated, the development is integrated. The commercial take-up has already begun. So you're going to say, even while you hold for leverage value to go up, you're going to get steady rental returns, because any place where there is commercial take-up, that translates into rental demand. Therefore, I would actually recommend that this is a project where, despite small hiccups, I would still back the project.
All right, so back the project. Deepak, that's the advice you're getting. Both of our analysts tell us that you should possibly go ahead and back the project. Of course, there might be a few delays, but that we're seeing across the market at this point. An interesting thing to do, like Shiva was telling us, is to be really careful, visit the site many times, ask as many questions as you want to, look for an active, construction site, make sure the cranes are moving, there are people going in and out. That's how you know construction is on full swing. We have a Magicbricks Now exclusive. There's a mega deal in the works, and it could be announced as early as June this year. Private equity firms are lining up, vying to sign a deal with Tata Housing to fund its upcoming premium and luxury residential projects. Disha Shah has exclusive details of this story.
To build premium and luxury residential projects, Tata Housing is looking to partner with private equity players like the Macquarie Group, JP Morgan, Standard Chartered and Singapore-based GIC. At least these are the 4 names that are doing the rounds till now, and this is what sources close to the development had to say. However, when we got in touch with the Tata Housing company, they refused not to comment on this. Secondly, sources also tell us that the company may co-invest in these projects and their participation could be just 30%, and rest 70% of the project's profit could go to the investors. Thirdly, the company is looking to construct homes in top 5 cities, namely Mumbai, Bengaluru, Kolkata, Chennai and Delhi, and all the homes will be priced between 3 crore to 10 crore rupees. And lastly, sources close to the development, they also tell us that the deal could be valued at $500 million, and we could expect the deal to close by sometime June this year.
And this is a very interesting development, because we've seen off late a lot of movement happening in the affordable housing space or the mid-income housing space. But to actually have PE funds interested right now in luxury space, we know that Tata Housing has one luxury project underway in Bangalore, in Banshankari, called Tata Promont. The rest of its projects are largely in the affordable and the mid-income space. So this is obviously a deal that we're going to be tracking very closely on Magicbricks Now. Moving on, the Maharashtra government could file a rejoinder to the Union Environment Ministry's observation that RA Milk Colony in Mumbai be considered an eco-sensitive zone. Remember, the MMRDA had plans to build a metro car shed here. Aishwarya Paliwal gets us details on this story. This also is an exclusive to this channel.
The State Environment Department of the state government will now file a petition against the observation that the Ministry of Environment has made. They are saying that, it will cost MMRCL extra crores, if they shift the car shed from RA to Kanjurmarg. Because Kanjurmarg does not fall in the way of the metro line. 7-kilometer extra stretch will have to be made if they shifted there. So they are saying that, even though they have said that it's an eco-sensitive zone, money-wise it will not make any sense. Also, there were 7 companies that had bid for Metro 3 to make Metro 3 station. So MMRC is saying that they will hold the names of all those top contenders for a month and see where this goes, because they are saying companies are also becoming a little conscious now of wanting to bid for other metros. So they are saying they'll wait for a month for a revert from the Union Ministry, and once they get that, then only they'll give out the names of the top contenders who will be in the foray to make Metro 3.
All right, Aishwarya, thank you for those details. Of course, those of you who've been tracking the stock market know that we've had a fairly rough day at the stock market. We've seen weakness right through the market, across commodities, across global markets. In our market in particular, we've had a bad day. The Sensex lost about 600 points before recovering marginally to close the day. but we did see, the market at levels we have not seen since 2014, and this was, pre the Modi wave, and that's something that a lot of investors are going to find fairly upsetting. The other thing that we should remember as home buyers is that a lot of times the stock market leads to people moving money out of the stock market and into real estate in a positive market. This is definitely not a positive market, and outlook for the market remains bleak for the next 2 quarters at least, which means that inflows, cash flows into the real estate market is also going to be weak. It's a good time right now as a buyer to go out and push for a bargain. If you have the home loan ready and if you have your down payment ready, you're likely in the next 6 months to get a far better deal as we see more pressure from the stock market, come into the real estate market as well. So keep an eye out for possible deals available in the real estate market. But staying with our stock market, we had earnings come out today. Axis Bank, DHFL and Indiabulls Housing Finance have all reported a 20 to 30% growth in their home loan dispersals. Now, these lenders are also very bullish about home loan growth, which means that for people like you and me, we stand to benefit from the growth. They'll compete against each other and offer us better deals. Let's take a closer look at those numbers. First up, Diwan Housing Finance Corporation's profit rose by about 16%. We also know that their housing loan sanctions grew 32% to 9,300 crore rupees this year. My colleague Aishwarya spoke with the management earlier today, and she sent us this report.
Home finance company DHFL posted a strong set of numbers this quarter. Company's net profit rose by 16%. Their gross NPA stood at 0.84%. The interesting thing this quarter was that their loan disbursement stood at a whopping 30%. They saw a rise of 30% on a quarter-on-quarter basis. Even the sanctions that the company gave this year stood at a whopping 31%. That means they saw a rise of 31%. The management said that this rise in loan disbursement as well as sanctions is due to the emphasis that they give on Tier 2 cities. They attribute this rise to all the Tier 2 cities that they cater to. Let's listen in to what Kapil Wadhawan had to say about this.
I think it's the low middle income segment. That's where DHFL has a strong leadership position. Smaller Tier 2, Tier 3 locations. The mid-income segment, the low and the mid-income segment is our bastion for growth, and that's where our focus area is.
Like Mr. Wadhawan pointed out, Tier 2 cities would be where the company would be putting most of its emphasis. The average loan size that the company is giving right now is 15 lakh rupees. Now, this is not the kind of money that people would shell out for huge houses. They are also saying that they do not expect 2016 to be any different from 2015. He expects 2016 to be somewhat on the lines of 2015 for real estate industry as a whole.
In fact, let's also take a look at Indiabulls Housing Finance that also announced its results today. Profits saw a rise again driven by home loan demand that grew 30% over the last quarter. Disha Shah sent us this report on the company's earnings.
Indiabulls Housing Finance Company has witnessed a strong quarter, registering a profit and growth of 23.6% year-on-year. Secondly, the company's dispersal also remained stable this quarter, registering at over 6,000 crore rupees. Thirdly, an important point to note here is that the company's loan book has seen a growth by good 30%, and the company says that this has come from the real estate market. The company's vice chairman and managing director, Mr. Gagan Banga, says that the demand for home loans has come from the affordable housing segment between the ticket size starting from 17 lakh and going up to 75 lakh rupees. He also said that they will continue to provide home loans on an average ticket size which is 24 to 25 lakh rupees. He also said that this quarter they have received registrations from 3 cities, namely Mumbai, Bengaluru and Hyderabad. Lastly, he believes that the pain for the real estate sector is not over, although the demand comes from the affordable housing segment, because he believes that the premium end of the market is still slow and will take some time to recover.
Well, the third largest private lender, Axis Bank, announced its results as well. The company's profit was up 15% and retail loan growth was up 27%, driven again largely by home loans. The management said it had some good news for home buyers, more rate cuts in the offing, and counting on those rate cuts, the management said there's more scope for cuts to be passed on. Listen in to those voices.
Underlying earning quality is strong, with operating profits growing at 20%, PAT up by 15% and ROE of 18%. Growth momentum was strong with loan growth at 21%, led by retail, which increased its share in the loan mix to 40%, up from 38% last year.
Within retail, there is a lot of demand for still coming in and growth coming in home loans, in unsecured personal loans and the credit cards businesses. Those, while there are geographic pockets in which those are weak, on an overall national basis, the demand is still quite strong. Where we are not seeing a lot of growth is in new projects on the corporate side, and to some kind of more limited extent in the SME space. Those are areas in which we are seeing slower loan growth.
All right, if you need any more proof about where to put your money, follow the big boys. Private equity pumped in $5 billion into real estate in India in 2015. Of the 90 investments that PE firms made last year, 85 transactions brought in the $5 billion, says a study by Venture Intelligence. Now, the study finds that a large number of developers formed several joint venture platforms, amongst many other. Many firms have also announced huge investments. Standard Chartered, for example, is set to invest 2,000 crore rupees in Tata Realty, like we told you a little earlier in the show. This investment will be used to form the 3,000 crore rupee investment platform that will help them buy into commercial assets as well. Next, Goldman Sachs committed over 1,800 crore rupees into a 74-26 joint venture with Nitesh Estates. Warburg Pincus has entered into a JV with Embassy Group for $175 million. The JV will build warehouses across the country. Piramal Realty was a hot favorite for investments with both Goldman Sachs and Warburg Pincus, who invested 900 crore rupees and 1,800 crore rupees in the firm. The latest JV is that of Stanchart PV, and IFC and ADB. These three firms will invest 1,200 crore rupees for a 70% stake in Shapoorji Pallonji's affordable housing venture. Clearly, real estate is the hottest bet for PE firms right now. We're moving on. As the budget session is inching closer, real estate developers have quite a few suggestions for the Finance Minister. At a press conference held in New Delhi today, the National Real Estate Development Council, on a red coast, spelt out its wish list for Budget 2016. Listen in to what they had to say.
Please ensure that you give infrastructure status to the real estate sector. Need to give little hand-holding by practical study or by creating a separate hand-holding fund to ensure that the projects are completed and delivered across the country. Please try to make special provisions for single window clearances so that the clearance processes can be expedited for timely delivery of projects. It is time that government reconsiders giving income tax concessions and rebates to developers who are promoting smaller houses for LIG or lower middle group or EWS categories, and also who are into slum redevelopment projects.
जो ATIB जिसमें अफोर्डेबल हाउसिंग के लिए एटलीस्ट अलाउ करें, जो 2-3 साल का टाइम था पीछे, उसको फर्दर बढ़ाएं आगे के लिए भी.
Support us with an easier taxing system to the consumers who would like to invest in real estate, and support Housing for All initiative of dear Prime Minister. Second is that in case you are able to make it, incentivize the poor sector housing so that we will have more focus on that area.
Number one, sir, please have a sliding scale for the registration charges. This is important for us because on an affordable housing segment, we would like you to have a lower registration charges, and maybe on the luxury side, the registration charges can remain same. B, sir, the service tax for the industry is really killing us. We have 33% taxation on the entire real estate sector, and the dream of affordable housing and housing for all can only get fulfilled with your support. So I request you to kindly look at these two areas because they are directly under your control. You could help us to look at the taxes in terms of service tax as well as look at the registration charges. Anything which is 1,500 square feet and less should be looked into very, very considerably at your level.
Good news for the realty retail sector. The Maharashtra government has approved the retail draft policy in principle, and the details will be unveiled next month. Now, the policy's objectives include raising the floor-to-floor height limit by 10 meters and a 50% additional floor space index over the base FSI to develop shopping centres. The government will also create a retail entertainment zone or retail clusters by providing a slew of tax benefits. In more good news for developers, the parking rules will be amended as well so that parking space is not counted in the FSI. So how will this slew of objectives for the realty sector benefit the retail segment, and will we see more developers jumping in to that retail segment? Joining me on the phone line is Pankaj Ranjan of GLL. Pankaj, tell us this, the 50% additional floor space index that we're likely to see happen in this policy, will this encourage more developers to take up retail, because retail has not been a hot favorite for the last 3-4 years at least?
Definitely, because we've seen that the retail real estate scenario, particularly in Tier 1 cities like Mumbai and in other Tier 1 cities, has been very, the last 2 years has been very steadily growing. The demand for retail space has already been there. So it's definitely an encouragement for more shopping mall, from real estate developers to build more shopping malls, particularly, and we've seen the success story for retail alone is not possible if you do not do mixed-use development, because what happens is retail can only work up to a certain number of floors, which is typically about 4 floors. Beyond that, to consume the FSI, you have to use do an alternative asset class like a hotel or offices, essentially. So with the increase in FSI, mixed-use development obviously becomes a much more favorable position to do. Secondly, from a consumer standpoint as well, a mixed-use development works better because it gives the opportunity for work and play together.
Well, can we expect the increase in new malls and redevelopment of current malls, at least in these cities?
Definitely a very positive step, but actually it really has to be seen because the land availability, particularly in the large cities, in a city like Mumbai, if I have to look at it, and then looking at Tier 2, particularly in Mumbai, the availability of land is very, very, very limited. So, although the policy might be very favorable, but the constraint is in terms of supply of real estate, in terms of land. In Tier 2 cities, there is essentially an amount of demand, but again, it has to be seen that the demand from a consumer standpoint remains as 1 or 2 malls. It cannot be like 5 or 6 malls suddenly will come up because there is a change in policy. So I think it's very favorable from a Tier 1 perspective from a city like Mumbai. But again, how much gets practically executed because of availability of real estate is a challenge in terms of quality land supply, where you actually would want to build a shopping mall, and shopping malls typically would need to be built in locations where there is a good amount of catchment already available. So it still has to be seen on the ground how much it will help per se as well. But definitely it is a very positive step.
A very quick question. We've seen a lot of the smaller malls, even in our big cities, even in cities like Mumbai, smaller malls that don't have a lot of brands have sort of died out. When it comes to this retail sector struggling to stay afloat in many cases, will this draft policy, if it comes through, who's likely to be the benefactor? The big malls which have 50, 60, 100 brands in them, or we're talking about the smaller ones with the one anchor store?
Yes, it will definitely benefit. One, because from a consumer experience perspective, we can give better stores if you increase the heights. Secondly, if you allow parking norms which are made much more easier, definitely gives a much more flexibility to developers to build more parking space, which is definitely a very important success factor from a retail space from a project standpoint. And thirdly, from increase in FSI, it gives the leverage, because see, a retail real estate we've seen typically only works very well on a leased model asset. So what happens is when you are only looking at leased asset, you need to build another asset class alongside where you can actually liquidate and generate returns during the construction phase of the project, which can be built by offices or residential per se. So if you're able to do that, the developer can actually, you subsidize the retail real estate and then it becomes much more profitable and engaging for the developer to build retail real estate. So definitely from a long-term standpoint, it's definitely a very big advantage.
All right, Pankaj, many thanks for joining us on the show and talking to us about that retail policy. Let's also take a look at interiors. Now, we keep telling you about how you can make your spaces and the inside of your home seem more and more interesting. Well, this week on our interior show, designer Jannat tells you how you can accentuate your space using prints and designs without hurting your pocket. Take a look.
Like you can see the side tables, I've sourced these from Chor Bazaar. Okay. So in fact when I went there, I saw and I picked up these tiles. Okay. And what I did is that I used these tiles to create a custom swing for them.
Oh, well, that's quite a smart way of using
So, it also looks seamless and it also kind of blends in. Yeah. And yeah, right behind the swing, you have the door to the biggest bedroom in the house. So the handle there again, like you've seen in the other rooms, they are flushed. But here I've brought that out. So the same tiles again are incorporated into the handle.
Okay. So, Janat, now I've been dying to talk about the sofa here. I think it is the most attractive piece in the living space. So, where did you get this from?
Okay, so actually, like I mentioned earlier, I have designed all the furniture in the house.
Okay.
So, yes.
This has been designed?
This has been designed by me.
Okay. What is the fabric that's used?
Okay, so I've used a lot of linen. I've used a lot of jute. The same thing that I've used on the carpet is this lovely raw jute that I've used. So again, it brings out a lot of texture. So the moment light hits the fabric, you see something very interesting happening. And you know, to get a little bit of fun and color which is there in the tiles, I've sourced these wonderful cushions from Yamani. These would cost around 500 to around 1,000 per cover.
So Janat, I believe there's another space left for us to explore. So let's go ahead and see what you've done there. Wow, Janat, this room is starkly different from the rest of the rooms that we saw in the house.
They wanted a very vintage and something very Parisian and very delicate. And I've customized this bed to give a lot of moldings and to give a lot of detail and embossing, like you can see. What I've done to actually offset it, we've used lace at the borders because we want to kind of blend in the femininity into the masculinity of the design. When we talk about the bed linen, yeah, I've used a lot of texture here. I've carried forward the linen and the jute texture. And if you see the cushions predominantly, there's again a lot of embossing happening white on white. And yeah, I have used some color to get that little burst, but at the same time it's kept very pleasant and very subtle.
Also, I noticed you've used really interesting knobs that add character to the cupboards here.
Correct. For the knobs, like you correctly said, which I've sourced from Chor Bazaar again, they are very easily available, and I think it's a very easy and a very nice way to just get a peppy look
It's quite chic.
All right, you can catch the rest of that show on the Interior Show this weekend. Also, while we're running out of time on the urban debate, a quick reminder to all of our viewers, BJP spokesperson Shaina NC announced on this show that the government wants citizens like yourself to send in suggestions and changes they would like to see in the Maharashtra real estate regulator. So if you or anybody else wants to make a suggestion, remember you can get in touch with us. The feedback contact details are on your screen right now. We promise to forward all suggestions to the state government to put in use when they're instituting a regulator in the state over the next couple of months.
It is India's landmark regulation, and the government wants suggestions.
If there are any written appeals that come through you, Faye, from your viewers, from people who are part of the housing fraternity, so I would request you, please do use me as a tool to reach out to make your voice heard.
Magicbricks Now, the voice of Indian real estate.